out. Today, we're going to be setting up a trade and step-by-step how we set up a trade. Let me go ahead and screen share so you could see exactly what I'm doing. All right, here we are. So as you could see on my current positions, I have a Kodak and Lemonade. And these are the stocks that I have purchased. And look at how long I've been holding this. If I was to go to a view trades, and I bought this stock way back in January 8th, 2021, and I'm losing $147. Now that's over 2 years because this is what, August? So January 21, January 22, January 23. So it's over 2 years and still losing 147 on my Kodak. Let's look at Lemonade. If you were to click on that by the arrow here by the symbol on my current trade and hover over the view trades. And this one is about a year, a little over a year. I purchased this stock, 10 shares of it at $18 per share. And it's down below 18. It's just like 16, 14. And so therefore I'm losing 1,860. And so you could see why I don't like to buy and sell stocks, because you wait over a year or 2 years and I'm not really making money. So that's the reason why I do options, because I love options. Because options, not the word that you have many different options, but it's called option trading. And option trading is something that I really like because I could make my passive income much quicker. So I use a Thinkorswim platform, and I have the list of the companies here. You can see there's about 75 companies that I really use since I've been trading since 2016. But not all companies are same as, way back in 2017. So let's take a look at this BIDU. So first of all, you just log on to Thinkorswim. It's a platform that is provided by TD Ameritrade. You have to, have a live account, and then they'll give you a virtual account with $200,000 of virtual money to practice. So you don't risk your real money, because I know we take our time to make money and save money. And if we happen to use that money to do option trading, not knowing what you're doing, you could lose it all. All right, so let's just get that out of the way. Everything is a risk, like option trading, buying and selling stocks, working, opening up a business, everything, there's a risk involved. It does not mean that you should not do anything. You should do something, even if you have to take a risk, because the reward is much greater. All right. And you just have to be patient. You have to be consistent. You have to be basically discipline yourself when you do option trading. So once you log on to Thinkorswim platform, and main page is a monitor page right here. That's where we're at. Okay. Now, see the arrow here? When you click on that, you'll be able to see this more in detail, like how many shares of stocks did I buy? I bought 200 shares, which is same as 2 shares of Kodak. It explains what the name is, Eastman Kodak Company. Okay. This is a LMND. It stands for Lemonade Incorporation Company. So when you click on this arrow right there, you could see all the details. So right now, I'm losing money because this current market right here is 528, and I paid $6 per share, and I bought 2 contracts, and so that's why I'm losing 144. So enough of the stocks. This is the reason why I don't like to do a lot of stocks. I just do it for the class, for the video purposes. But my live account, I don't know any stocks at all. All I do is like option trading. So if I was to look at the company called a symbol BIDU, okay, right there. It's a Baidu Incorporation. You may not be too familiar with this company, but this is one of my lists here. It is a 143.68 per share right now. So I put that symbol in there, and then I just enter. Okay, just make sure that we're still going to be setting up option trading on this company. And before you do that, once you put the symbols in there, then you take a look at the chart and see how the movement is. So this is a 20-day, 1-hour chart that I'm looking at. And by looking at this candlesticks, which these are called candlesticks, and if you were to go down here and click on this plus sign, candlesticks will get bigger. See that? How you could see better? And that looks like a candles, right? Square candles. And so, you know, red means like people are selling off, and then green means people are buying. Okay, so there's more people bought today on this BIDU company than sold. That's how you could tell, like people are doing, you know, they're selling or buying. All right, so if you wanted to look at the overall market before you set up a trade, you will look at that, okay? It's about half hour before the market's going to close right now. And it's been a bearish market all day long. Bearish means is when you look at the market watch, all these companies, it's all red. Okay, that's a bearish market. Market is down. Overall market is down today. And then when all these are green, then you call this a bullish market when the market is up. That's how you determine whether it's a bearish or bullish market when you hear other traders talking about. Okay, so we're going here, and now in the past where I've done 10-day trade, and it's been working really well for me, but because of the unsure market and everything's up, inflation is up, interest rate is hot, and like a cost of food and groceries, gas, you name it, everything is up. So I like to hold this trades a little bit longer. It doesn't mean that I'm going to close it in 24 days. I'm just going to hold these options longer than just 10 days. So I choose 24. This means the days, right? Till expiring days. I'm going to choose September 1st right there. All right. So this tells me all the strike prices I could choose from. See how it says all right there by the strike? If you don't want to see all strike prices, then you could just do 4, and you only show you 4 strike prices you could choose from, or 6, 8, 10, 12, 14, so on and so forth here. So I like to just go to all. I want to see all my options. Okay. Now, next thing I want to do is I want to look at the chart and see whether I want to do an up or down trade. Now, this is 20-day movement. So let's change that to 10-day and see what happens. Okay, by looking at this market could go down or it could go up. The same as a 20-day, okay? Let's look at a 5-day chart. Okay, so 5 days also indicates you could do it either way, up or down trade, but then it's more towards the low end of here, right? Because 143.84, which is the current market, is much closer to 141.22 and so fall away from highest market of 156.50. So that's how you kind of determine whether current market is towards higher or lower, and looks like it's lower. Let's look at 1-day movement. Now this is 1 day, 1 minute movement. So wow, look at that. Whew. And then went up and then did a down way drop down here. Okay. So as long as you have money in your option buying power, you could do this trade. Now, day traders will set up a trade, and then they'll just sit in front of the computer and watch whether they're doing up or down trade. If if it's up trade, then when the market goes up, they hurry and close. Same with if they were doing a down trade, when the market goes down, and then they hurry and close to take profits. And I don't like doing the day trading just because who wants to sit in front of the computer all day? I don't. So that's what I like doing, option trading and just holding it as long as like I need to. Some people hold it for like 30 days or 45 days or 2 or 3 months. It all depends what your style, what your preference is. But for me, I just like to go about anywhere between 7 to 10, 15, 17, 20 days, 24 days. Okay. So I will, since I'm going to be holding it, I think it's going to come down. All right. Because why? Well, it hit right in here, today's market, 144, and then it's starting to come down. So it might come down to like 142 or 140 even. Right? It says 141.22 is the lowest. Let me see what the 20-day low market is. Yeah, 138.61. So we know that 1-day movement low was like 141, somewhere in here. And 20-day movement shows it went down way below 141, 138.61. So I'm going to set up a down trade, and it's 24 days till it expires September 1st. I will be see, in case you're a beginner, see this highlighted blue area. So this is the strike. Let's see, strike prices are right here. It says strike right in here, right? And this is a put side right here. It says put. And this is all highlighted from like strike price of 144 and higher. It's all shaded blue. That means it's in the money. And then if you were to go to the call side, it's just the opposite. So 140, let's see, 143 and below strike prices again. Okay. So like 143, 142, all the way to 90. On the call side, all these strike prices are in the money that are shaded, blue or purple color. Depends. Like somebody might say this is purple. Okay. Or the dark blue. So that's how you know that when you choose your strike prices, whether you're choosing it out of the money or in the money. So I said we're gonna do a down trade. So what I'm gonna do is I'm gonna take a piece of paper, write down the current market price of 143.80. And be sure to write down BIDU symbol. And then today's date is, and then expiring date, September 1st. So that's 24-day trade. Okay. So 143.80 was the current market. As I'm studying the chart, it's going down already 143.73. So that's a good indication that it's good to, I'm going to feel good about setting up a down trade. Okay. So 143.75. So I will choose a in the money 148 right there. And then next strike price, I'm going to choose out of the money strike prices. So 148 and 135. Okay, there we go. Now, if you don't have a lot of money in your option buying power, you don't want to do a 10 contracts because that's expensive. Okay, take a look at it quickly. So it's going to cost you, cost of trade right here is like 6,113. That's with the $13 of a commission for 10 contract. So if you don't have like 6,000 or more, then you may want to decrease your quantity to like maybe 5, or how much money that you have in your option buying power. And I will set that to good to cancel. Okay. Now it's going to cost me only $3,071.50 with commission. Now, break even stock price is 141.87 and current market is 143.82. So I would say that's about $2 a difference or so. Or if you want, you could take a look at the calculator here and do the math here instead of like what I do old school way. So I'll pull up a calculator here. I guess I have to edit this. Okay. And pull up a calculator right in here. Okay. So you take 143.70 and 141.87. See how much the difference between current market and break even. So 143.70. I'm going to write down 141.87 is the break even number right there. 143.65. This number is going to always change because market is open right now. And it's good to set up your trade when the market is open and there's a movement. 143.65 minus 141.87. I'm just showing you, you could use everything in this platform. Okay. Like I said, 143.65 minus, I wrote down 141.87, 141.87 equals, yeah, $1.78. So close to $2, like I told you. So that's not too bad. Now, some people some traders don't focus on that, and some do focus on breaking even. But let's take a look at this. All right. Now, the reason I have GTC versus day is because if my trade does not go through when the market closes, this order is going to disappear if it doesn't get filled. Then I have to start all over again. And I want to avoid that. So therefore, I changed that to GTC, stands for good to cancel. That means like you'll stay in that working order until I cancel it. Good to cancel. I cancel it myself. All right. So here we go. So it tells me I can make 3,385. That's the max profit, and the max loss is 3,115. So I have to risk that much money to make this kind of money. Okay, like I told you in the beginning of this video, there's a risk involved in everything that you do, everything. Okay, starting a business, there's a risk involved. Working for corporate companies, there's also risk there. If you don't perform the way they want you to perform, they may fire you, right? Or as you get older, after you put in like 30, 40 years and trying to, save companies money, some companies will actually find a reason to fire you, saying, you know what, you're getting too old, you're too slow, you cannot keep up, so they'll fire you. So everything is a risk. So in this case, yeah, you're risking this money, but if you don't risk, and let's just say like you have $3,121.50, and you don't take a risk and just spend this money, once it's spent, it's gone. Whether you spend it towards the bill or about something that you need or you want, it's gone forever. But if you take the same amount of $3,121.50, which is the cost of trade with commission, you take this money and hoping to make 3,385, anywhere between like 1 to 24 days. We have to take a risk. If I didn't take a risk, I wouldn't be where I am right now. Okay, so now we talked about this. So I wrote it down. It's very, very important to write down the current market when I'm looking over the trade, looking at the chart, trying to get ready to set up a trade. And right now it's 143.60, so it's gone down like 14 cents. All right. So if we were to take 143.65 and 141.77, because it's a break-even number is changing because of the market is keep changing, which it should be doing anyway. Okay, so 88 cents difference. That's not bad. Okay, so we will set this up. So we will send it. And hopefully you'll take it. So you go to monitor, and right now it's a working order. Okay, that means it's not have been filled. Because why? This mark status right in here, and this price, the debit limit price, okay, it has to match, and evidently it matched it, and so it took it. So now what I'm going to do is, next step is I'm going to write this down. So today's the date, and then whatever it is, spread, vertical, single, put, single, call. In this case, I did a vertical, and I chose a 148 put. I bought it, and then I turned around and chose a strike price of 135 put, sold it. So like you could see a buy and sell, right? So then the premiums, that's the price that I paid, $9.40 per contract per quantity for this strike price of 148. And then I also paid $3.35 for 135 put. Okay, to set up my vertical. So overall, so this number 940 minus 335 is 605 limit, which is my debit. That's how much I pay to set up this trade. Now, so I write this down in my journal. Okay, so I'm going to do that. And 9/1/23, 24 day. Okay, there we go. 24-day trade. And look, we're already making $50. How about that? That means since this is a down trade, that means like the market on this BIDU symbol is going down, which is a really good news for us. So I'm going to write down this 148 put, and then I'll put +5 next to it. That means I bought 5 contracts, and then 135 put, -5. I'm just writing this down like this. I put 48 put +5 right in here, and then 135 put, -5. You could write them in this way, however makes sense to you. Okay, you could write them in this order, you could write it either way, as long as you get all these numbers in. So then right after that, I put down 940 by 48 put +5, and then 325, 135 put -5. And we already know it's 605 is the debit limit. Okay. Then what you do is you take 605. Now we're going to be figuring it out like max loss and max profit. Okay. Even though when you're ready to confirm and send, it told you how much you could make earlier, but that number is changing because the market is moving. So therefore, you want to do an old school way. So you could take a calculator here, and so you guys could see. So 605, all right, 605, all right, times 5 equals, okay, 3025, and you got to move that decimal 2 spaces, just like math when we learn in school. So that is times 5 is 3,025 is max loss. Okay, now you take these 2 numbers. Now we're going to figure out the max profit. So you take 148 minus 135 equals 13. Okay, so it'll be 13, and then you add 2 decimal, no, I mean 2 0 right after 13. So that becomes actually, yeah, it's a 13, right? So you, okay, 13 times 5. You got to times by 5, right? Right there. Okay. There we go. 13 times 5. 3, 5, 15, 1 올라가고 5, 6. Okay, that's 65. And you got to add 2 zeros right there. So you go 0, 0. So it's actually 6,500 minus 3,025 that we got, 3,025, we got that from 605 times by 5. 5 is the contract or quantity that you purchased. Okay, the how many contracts or how many quantity. That's what we times by 5. Okay, so then you take, so 6,500, because you got to add 2 zeros right in here. So 6,500 minus 3,025, okay, is 5, 7, 4, 3. Okay, so max profit is 3,475. That's the kind of money that you could make. And you could already see that we already are making money because that means the market is going down, going in our favor. So that's good. So that's the whole process of setting up a option trading. This is a vertical. And now after the market closes, okay, you may want to write down, actually, I expect, or I strongly recommend for you guys to write the number down. So end of the day, or you could even go like maybe 15 minutes early the next day before the market opens, and you want to write down the day. So which means like if you're going to write these numbers down, now you're doing journaling, you're documenting. Whatever you've done, you got to document everything, right? So we document our trade. So when the market closes, like in 2 minutes, okay, where I am right now, then I'm going to be write down today's date, okay? And then I'll write down the current market price right in here. And then you write down PL open. So right now it says $50. It could be $100, or it could be $25, or it could be negative. So anytime when you see any PL open numbers in a parenthesis, that means you're losing money. And if it's not in parentheses, then you're making money. So this, for example, like BIDU that we just did, overall, you're making money $37.50. But let's take a closer look at here. So on the, let me just kind of move this a little bit so you guys could see. So 135 put on -5, I'm losing 87.50. Yet 148 put plus 5, I'm making 125. So overall, these two numbers is 37.50. That's how much I'm making so far. I hope this will help you how to set up a option trading. And I will be doing this at least once a week on different companies. So be sure to subscribe my other YouTube channels as well. Thanks for joining me, and I'll see you on my next video. Thanks for watching.